The 4th of July is nearly here, and that means many investors are keeping an eye on the second half of the year. Where should you buy and where should you get out of right now? Joining us today is MarketBeat analyst Jeffrey Neal Johnson. He is going to cover some of the sectors he thinks you should be dumping right now at the beginning of July, and the sectors that are primed for a buy right now that would be good to own now before they take off later on in the second half of the year. Jeffrey, so excited to have you here today. We are going to cover so many tickers today. We're starting out with a couple of sectors on your dump list, but eventually you're going to get into 3 different sectors and cover 8 different stock tickers that are on your buy recommendation with where they're at right now and some pretty deep pullbacks on a few of these names. So I'm excited to get into your big list today. Let's start out with where the market is right now and the sectors that you think are a little overbought and ready for investors to take some profits and get out of their portfolio.
I feel like the market is crazier than most people have ever seen it at this point with SpaceX and all the upcoming huge IPOs and all of the volatility. There's so much going on. It's almost like watching a whole bunch of scared cats run around. You never know what's going to happen from one day to the next. You never know what stock's going up, what stock's going down, why it's going to go up or go down. Even the simplest things will drive a stock way through the roof. And then you'll look at its peers and say, why are these guys not reaping the same benefits? So I feel like the second half of the year is going to be a flight to a more secure realm to where you can get growth, but you're going to get growth out of things you can physically put your hands on.
So we're going to talk about some of those areas to find growth in the market. But let's start out with where you think investors should be getting out of the market right now, because sometimes that's just as important as where to buy. Where should you be selling and taking the profits while you can?
I would be getting out of anything that's not tangible. And so what I mean by that is the second half looks like it's going to be full of mergers and acquisitions, combinations, breakups. You have SpaceX looking to partner with Charter to start a mobile phone company. You've got all kinds of media conglomerates breaking up and recombining. You've got price for perfection semiconductor stocks. You've got price for perfection chip maker stocks. One little hiccup in any earnings could send all of this stuff tumbling down. It's a giant Jenga fortress of things that can't really touch. And it's stacked so high at this point that it's really only going to take the smallest little thing and the whole tower will collapse.
We've been hearing that kind of take from several different guests we've had on the show in the last week. And I feel like we're starting to see more headlines, more YouTube videos out right now about this. This AI bubble could collapse anytime. The market could be falling. It's time to rotate. So we're definitely hearing more from bears right now. But I also hear from viewers who are feeling a little bit of fatigue of the sky is falling, the crash is coming. So there's a little bit of both sides from investors and from analysts and guests right now too. So this isn't a full bear approach on the market, right, Jeffrey? I know you have several areas that you are recommending to invest in right now, but I think knowing what to get out of and where to take your gains while you can is a good thing. Do you think that right now is a good time for investors to be taking some profits?
Yeah, I really do. I think that anything that you have in your portfolio that could suffer from this AI bubble collapse, that could suffer from soft earnings reports. There has been a lot of propping up in the economy in the first half and a lot of propping up in these earnings reports. There's been a lot of talk of like circular financing, and it all kind of looks like the housing collapse and the dot-com bubble, just with a different tablecloth and a different set of dishes.
Okay, interesting. Time to take profits while you can on some of these names. Again, we've been hearing from plenty of people and seeing new headlines talking about some cracks in the AI market. If you are wanting to hear some other names to look at along those lines, make sure to check out this recent premium article. It just came out on MarketBeat.com right now. Again, this is an article that normally only our premium subscribers get to see, but we are giving it for free to our YouTube viewers. You can scan the QR code or click the link in the description to get this article on the 5 places investors can hide if this AI trade continues to crack. So again, check out that article and this additional list of names to look at by scanning the QR code or going to that link in the description of this video. But Jeffrey, let's get on to your list today. We are going to cover 3 sectors that you you believe are great places to take those profits and rotate your portfolio into some of these other names. The first sector here might be the most controversial because this is a sector that has been really underperforming over the last few months.
Yeah, this is one of my favorite sectors. It has been really beaten down over the past 6 months. It's the eVTOL sector, and I've always been a huge bull on this sector. The current environment in the market with this rotation of capital into the big players like SpaceX and the upcoming IPOs and that kind of stuff has really, really, really beaten this sector down. The reason that I think that the second half is going to be big for this sector is because every single player has a goal to have one of these things up in the air by the end of the year. So sometime between now and the end of the year, there are going to be major catalysts springing left and right out of this sector where these crafts get certified, where they start carrying their first passengers, where they start carrying their first paying passengers, where they start collecting military contracts, and so many other catalysts that you can look forward to within the sector.
Yes, I know this has been one of your favorite sectors, Jeffrey. You covered it a ton. You write an article a week on this almost, and we've done lots of videos over the last, year or so talking about Joby versus Archer and other interesting names in the sector. And there was a lot of hype, a lot of buildup. The stocks were doing really, really well. And investors who invested close to that top have not been happy to be holding on to these names right now because they're not doing anything yet. And I think that the expectation was there on those catalysts that you mentioned that they were going to be commercial this year, but we haven't seen that play out yet. So let's talk about that timeline as a sector before we get into the individual names that you're recommending in this sector. When are we going to see that commercialization, and are we going to see it? I think the fear for some investors is this a concept that just fizzled out? Is it something that there was a lot of expectation and then it didn't end up panning out? Is it already over? Is a fear I've heard from some investors.
I absolutely think that that is a fear that investors should not have. This sector is on a roll. The thing is, there's always like a hype train and a lull. You're talking about eVTOL, you're talking about quantum, you're talking about AI. There's always like this hype train where the stock just goes through the roof because everybody says, hey, look, we can do something fantastic and new. So the stock shoots through the roof, and then people realize, wait, this is going to take like years. By that time, another hype train's come through. The retail money tends to flow from one hype train to the next. So if you bought these stocks to accumulate them for the long term, like I've said to do from the beginning, you're in a great place right now because these beat down stocks offer perfect accumulation points.
Well, let's get to the stocks in the eVTOL sector that you are buying yourself and recommending to others right now based on where entry points, especially. What are the 3 stocks that you are liking in the eVTOL space?
Okay, so the first one is going to be Joby, ticker symbol JOBY. First stock I ever wrote about, and probably the first stock I talked about on MarketBeat here as well. I really like this stock. It's been around for a long time. It's taken some hits in sentiment and had some problems here and there along the way. But when it comes down to it, we're right here at the beginning of the second half of 2026, and they're right where they said they're going to be.
Oh, that's good news for the company that they're on track with where they said they were going to be. So they're not actually behind yet, but how far or close are they to commercialization? And are they leading the race right now between all of the companies who are working towards getting a commercial product in the air?
So they're really in the final stages of approval. And one of the things that I think really has investors on a fence for these stocks are they're not as communicative as a lot of investors would want them to be. Location in the race, for instance, as to where they are in the race, really kind of depends from one press release to the next. So I feel like it's a constant neck and neck for first place because every single one of them wants that first mover advantage.
Yeah, that makes a lot of sense. And I think it's time to move on to that next name on the list because we have so many stocks to cover in this video. I just wanted to talk about the chart action for Joby just a little bit. This one's down 34% year to date. So it is absolutely beaten down. And if you look at what analysts are saying about Joby, they do say that there's quite a bit of upside for the stock, although that sentiment is changing a little bit. But it is a really good buy the dip opportunity be looking at this name if you believe in that long-term thesis. Jeffrey, let's get on to the next name on your eVTOL list because I think it's a very similar chart with this next name too.
So the next one on our list is, of course, the direct competitor, Archer. They're the ones that's partnered with Stellantis. They're moving along just about the same clip. And I think that all of these in the same sectors, tend to travel about the same way. And you can look at that as proof kind of that these guys are always kind of like neck and neck. One has a catalyst, it might shoot up a little bit, but the other one's going to follow right behind it because the expectation is that these stocks are all chasing each other to the end.
Yeah, that race is absolutely on right now, but they are currently moving as a group, especially when you look at their stock charts. Again, we just looked at Joby's. Archer's chart looks almost identical. It's also down roughly 34%. It's down 33% for the year. So very similar stats here looking at these different names. Is there anything different or unique about the progress that Archer's at compared to what we just talked about with Joby?
Not a whole lot of uniqueness there. They are scaling up their manufacturing facility. They're unlocking different tranches of money to continue on with their certification testing. But the couple things about this one stock is they have a rock solid balance sheet, and they actually were recently inducted into multiple Russell indexes. So that gives them forced institutional buying. They were brought into the Russell 3000, the Russell 2000, the 2500, the small cap complete value index, and the Russell 3000 E-value index. It shows a little bit of validity to the stock that the Department of Defense is working to unlock payments to the company. So I guess the difference would be that this stock is locking down on the business side a little bit more than Joby is.
All right, a good look at the comparison of the two leaders. You have one other name on this eVTOL list before we move on to the next sector, and this one is probably the most risky play of the three.
Yeah, this one is the most beat down, and it's going to be Vertical Aviation, and it's EVTL. They are the English counterpart, the over the seas counterpart to Joby and Archer. They're right there neck and neck with Joby and Archer. They have started manufacturing the first of their proprietary battery technology packs for their Valo aircraft. So they're actually maybe even a little bit further forward because they're manufacturing replacement batteries and stuff like that. But here's the thing about this stock. This one right here gets no action. They get no love from the sector. They get no love from anybody. It's incredible to see that this stock is still as beat down as it is.
Yes, and I can show firsthand. I see the pain of investors who bought into this name. You talked about it on our show back in January as one of your favorite names in the sector. I added it to my Bridget Spies watch list at the time, and it is the very bottom performer on that watch list. If you go to marketbeat.com/Bridget or scan the QR code, you can check and see how some of the stocks we've talked about on the show perform over time. And EVTL is the very bottom of the barrel. It is down 71% since January when I added it to the list and we talked about it on the show. And that is very much far behind any of the other names that we talked about. So like you said, this one's beaten down quite a bit. But with where it is right now, do you think it's less of a risk? I mean, I think all three of these names is important to talk about. These are all still speculative investments. They still have to prove the concept that there is a market for this. So still all risky investments. But with where the entry points are now, especially on a company like EVTL, do you think it's less of a risk for investors to put a little bit of money into some of these speculative names right now?
I'm the kind of guy that believes that you only lose money if you sell the stock, right? Just because it's down and it's beaten down, it means you're behind, but you haven't lost that money. You haven't locked it in yet. I buy stocks all the way down. And I feel like this stock is so close to an absolute floor that it is sitting at a very nice accumulation point. It doesn't change the thesis. It doesn't change what they're doing. They're just not getting the love from the market, right? And I think that once they start doing some hard releasing where they're saying, hey, we've flown this on its maiden voyage. We're taking in money on this particular aircraft. I think that the people that buy this stock at the current level will be happy when it finally gets back up to the level that it got onto Bridget's buys list.
I want to hear from viewers here in the comments. Are you in line with what Jeffrey's saying of buying all the way to the bottom, or do you cut your losses and run when you see a stock starting to drop at the level that this one has? I'd love to hear your thoughts in the comments too. Again, everybody has a different take on how to invest, so let me know your thoughts in the comments. Jeffrey, let's move on to this next sector. We started out with maybe the most beaten down, most controversial sector. Moving on to the next one that was definitely beaten down as of just a couple of weeks ago, but is starting to rebound pretty well, and that is space.
Space got beat down when SpaceX came in and a whole bunch of capital rotated off the players. But when that happened, it didn't change the fundamentals of the actual players, right? And so all that money left, but these other players, they just kept going. And so we've had some pretty good news rolling around in the space economy. SpaceX obviously is an interesting play. It's a volatile play right now, but there are other plays that aren't as volatile that are doing some of the cool things that SpaceX is doing.
Yes, and I want to get right into that list. You have three names in this space sector that, again, we talked about a lot leading up to SpaceX. They were all seeing tremendous growth before the IPO. After the IPO, they pulled back just as sharply as they rose. And now a few of these names are starting to see a nice little rebound and starting to climb back up and gain back some of those gains they originally had. What's the first space stock that you're looking to add right now?
Right. So the first one's going to be Rocket Lab, RKLB. And I feel like they're probably the closest competitor to SpaceX. I think that they have taken a step even further in that fight with their recent acquisition of Iridium, which gives them a constellation of satellites to work with. So now they kind of are par and par. They're launching and they've got satellite services at the same time. And the nice thing about Iridium is their satellites are L-band satellites versus what SpaceX has. So they actually penetrate through weather. So they're more suited for defense network contracts and logistics networking and that kind of thing. So it gives them a different total addressable market from SpaceX, as well as kind of a combined total addressable market that they can attack.
Right, and Rocket Lab was on our radar earlier this week for that big acquisition they made with the Iridium, like you said, and I think that is solid news for the company. I think the market's reacting pretty well to that news too, just looking at the chart.
Yeah, I think so too, and I think that that's going to be the ongoing as you go through the second half of the year. That's going to kind of be the ongoing theme. Is going to be communications consolidation. Now that we can put communications in outer space reliably, and we're going to start seeing phones that communicate with outer space, it's going to kind of put a crunch on like domestic, like ground-based networks. And so looking at the space economy as kind of like the future of the current communications networks is a good way to look at the second half of 2026.
Well, speaking of communications networks, let's get right on to the second space stock on your list. Again, one of my favorite concepts in this stock.
So the next one I also think is really cool, cell phones in space. It's ASTS, and their ticker symbol, of course, is ASTS. And I think that these guys are also a strong competitor with their current launch schedule and their current technology stack. I think that these guys are on track to do something really cool in the second half of 2026.
Yeah, we hope that that continues to do well for them. I think that there's little glitches here and there with any of these space companies. If they have a bad launch, it can sometimes impact their stock price. If something doesn't go quite as planned, and there's just like little steps along the way of proving the concept and building that infrastructure, that could be hiccups along the way for these companies that are investing so much capital up front. Do you think that some of that volatility could come into play for ASTS? I know investors did really well with this one for a while. That saw some big gains. Then we saw those gains pull back again. Again, that volatility story seems to be a part of both ASTS and even Rocket Lab too.
Yeah, I think that the volatility will remain, but I think that the whole thing across all three of these sectors is that this is kind of like the season of solidity. It's the kind of situation where all of these different technologies and different sectors go from a experiment, like a science experiment, to something tangible. And the proof of that is that the Japanese government actually just gave or secured a $912 million agreement with ASTS to build a network for Rakuten over there in Japan. So they already see what ASTS is doing here, and the Japanese government has come in and said, hey, we want you to do that for us over here. It's a situation where as these technologies prove out across all three sectors, it's just going to see one catalyst after the next, because what stops Australia from wanting one for theirself tomorrow, and England and every other country wants a sovereign communication network. and ASTS can build that in outer space for them now.
All right, let's move on to the third name in space before we get to that final sector. Again, so many stock tickers we are covering in this video today. What's the third space stock you're looking at?
Okay, so Intuitive Machines, LUNR, we're going back to the moon, and they've got to have a vehicle to travel around in. And I think that LUNR, outside of that technology, is doing some pretty amazing things.
And this one of the names in space has pulled back quite a bit, and it only saw a little bit of a bounce rebound. So it hasn't recovered nearly as well as the other two names that you just mentioned. Why do you think that is?
When you look at putting like vehicles on the moon and you look at the current geopolitical climate, you look at the advancements in heavy payload rockets or the lack of advancement in heavy payload rockets, the concept of getting a vehicle out there becomes riskier and riskier, right? So over the past 6, 8, 10 months, there has been more thought on getting satellites up in the sky, getting a communications network built for war, getting a communications network that is sovereign and can't be disrupted by other countries, and less thought about that moonshot of putting a vehicle on the moon, right? I think once the political heat and the geopolitical situation within the world kind of calms down a little bit, it'll open back up that vision for what we can do next. And I think that that is when you'll actually see this stock get the rewards that it deserves.
I think there was also just a little of that hype that you mentioned earlier with the eVTOLs that had to play in with this stock and the whole space sector. There was so much hype and headlines around it, and that's what had it soaring to more than double where it is now and pulling back just as sharply. So again, the warning to avoid the hype, but also look at buying when there's less hype around these names. I think that that is a part of the story too with all the names we're talking about here today. Well, Jeffrey, let's move on to this last sector to talk about, and that's energy. And a couple of these names have been really the hottest names in the sector. We're only covering two stocks in the energy sector, but let's get into the first one that you're looking at in energy.
Okay, so in the energy sector, we're going to look specifically at what is called behind the meter power generation. What we're looking at in the second half is that everybody in the first half realized that data centers can't just be built from scratch and plugged into the, electrical power grid. That created the SMR thesis, and that created all of these energy theses and consolidating and spinning up nuclear power plants and all of that other stuff. When you talk about behind the meter power, one of the number one places you want to look is going to be fuel cell energy, and it's FCEL. And they've actually done a couple of things here recently to lock in sort of a moat in that arena of behind the meter power.
So they got the product there, but right now the price action on this one is kind of ugly. It was down another almost 15% just on Thursday, the last day of market action this week. And it's just continuing to fall right now from the highs it saw just a few weeks ago. What's behind some of the price action we're seeing?
I think a lot of it is just the last little bit of the drop to the bottom, right? I think once we move forward into the second half of the year, they have multiple power purchase agreements that are going to kick off. They'll start collecting money from those. They've got multiple units that they need to place. I think that when their thesis first started, of course, it was also sort of like a hype train. People got on the hype train, they got off the hype train, and they've been waiting for that proof in the pudding kind of situation. And fuel cells second half of the year is full of that. It's full of them placing oxide cells on sites, spinning up units at current sites. And I think that the second half of the year, when it sees those catalysts, it will be able to kind of shrug off the sentiment from the first half of the year, where it was just kind of like a beaten down science experiment play.
Yeah, this one, though, is still up over 400% in the last year. So clearly, there's a lot of hype behind this name yet, even with the pullback it's seen. Tremendous gains for investors who were in on fuel cell last year. If you happen to be, let me know in the comments, because that's a great entry point on this name. But let's talk a little bit about the fear of how far could these names fall. And the eVTOL sector we talked about is a really good example of when you think the bottom is there, it just keeps falling lower and lower and lower. Do you think that that could at all be the case for these energy sectors, or is there just so much demand in both of the names that we're going to be talking about here today that any pullback will be recovered once that next earnings report comes out?
I think in all three sectors, right? The first half of the year was kind of like this accumulation of catalysts going from science fiction to science fact, going from no money out there to starting to collect money, putting things in service, making things actually work, right? That has allowed those stocks to get as beaten down as they are. But I think the second half of the year is what fixes that as they start going more from science fiction to science fact and they start spitting out these catalysts, right? I think that institutional money is starting to rotate out of all of these overplayed sectors and into these underplayed mean reversion scenarios.
Speaking of massive growth stories here in this sector, let's get on to the second name you are looking at in the energy sector. And this one has had the most tremendous growth story, I think, of any energy stock. It's up over 1,100%, even with some recent pullbacks.
Okay, so we're talking about Bloom Energy and their BE. The thesis that I was talking about a few minutes ago, where AI data centers are requiring behind the grid power so that they don't have to connect to the power grid, has been proven out 100% by Bloom this week.
Let's talk about some contracts and other things that are bolstering this, skyrocketing growth story that we've seen for Bloom. And also, I want you to address to investors when you're talking about some of these contracts and the actual money it has coming in, does it justify the huge run up the stock has had? Is it trading at a level where investors can still buy it today and still see some gains, even though it's already up over 1,100% in a year?
The biggest catalyst that's happened with Bloom and the proof and the thesis that we were talking about a minute ago with AI is that they recently partnered with Brookfield Corporation. Okay, they are kind of like a data center all-in-one builder. So Brookfield has acknowledged the fact that connecting to the power grid at this point is almost impossible. And the only way you're going to be able to do this is with solid oxide fuel cells, small modular reactors, something along that line. And so they've actually partnered with Bloom to roll out a complete data center blueprint where you get the ground floors, you get the cooling, you get the four big ones. You get the concrete, you get the kilowatts, you get the cooling, and you get the copper. So they put all that together and you basically have a data center package that runs from day one off of a Bloom Energy fuel oxide cell. And that allows them to get everything up and running. And then once the hydrogen economy kind of catches up to the fossil fuel economy, these fuel oxide cells can be switched over to hydrogen to make these green energy plants.
All right, so back to that question of you've showed the proof in the pudding of why the demand is there for these companies. But let's talk about what that means for investors looking at adding this stock to their portfolio after the massive run up that it's seen. Are there still gain potential ahead for investors?
I think that every single one of the companies that we've talked about today, whether they seem a little overpriced or a little underpriced, I still think they're all in fledgling environments, right? I think they're all still baby birds about to jump out of the nest in the middle of, in the middle of July. Every single one of them have fundamental stories attached to industries that are growing at hyper speed. I think that while there may be room to fall, there is so much room to grow, and that if you're the kind of person that sees 5, 7, 10 years into the future, buying these stocks now and accumulating on the lows will result in you having a fairly fulfilling retirement, 7, 8, 10 years down the road.
Yeah, some speculative names, but also some exciting ones that have some potential. I'm so curious to see what viewers have to say about this concepts that Jeffrey talked about today and where to buy on some of these names that have been really beaten down or others that are just starting to pull back a little after that huge run up. It's an interesting look at three different sectors that all have some strong fundamental potential. Jeffrey, thanks for the list today. If you like what Jeffrey has to say, make sure to watch this video we did talking about buying the dip in the nuclear sector. And he talks about some specific names in nuclear that are also beaten down right now. And he says make great investments for the second half of the year. You can watch that entire interview here.